Well, hello, everybody. Michael Silva. You're watching the Stock Market Brief Show. Be sure to hit that thumbs up if you haven't done so already. Hope you're all doing well on today's CPI day. Yay! What happened? Well, we came in at 4.9%. Consensus was 5%, and the market said, woohoo! But there was more stuff that happened. We'll go over those charts in a little bit. Core inflation came in as expected, but still really high, right? So there's a lot of work to do. Remember, the Fed's target is 2%. Yee. So what did the probabilities of a Fed rate hike or rate cut do? Fed fund futures? Well, there is now a 93% probability that in June we will be holding rates steady. Not really new news there, but I will call out July looks interesting as we have kind of a coin flip here of a rate cut of 25 basis points versus holding it steady. Remember, the Fed's base case is holding rates higher for longer, and they even said this in the last meeting that even if inflation were to fall to 3% was the question, will they, consider it a win or whatever the question was. But Jerome Powell came back and really said, no, our target is 2%. And we're going to do what it takes. We're not going to put our tools away until we get that. So the base case is still rates higher for longer, but the market does not in the slightest believe that. Actually, you can see that they're basically pricing out completely that come December, there's not a chance that we'll have a 5% federal funds rate. Okay, and you can see here as we go, we're actually saying, yeah, there's a higher probability in September we'll be cutting, then we'll be cutting again, and then, well, we'll be cutting again. That's where the probabilities lie. So we're looking right now as, cutting 75 basis points. But you got to understand, the Fed is not saying that. The Fed is saying that their base case is holding them higher for longer to get inflation down. So what's going to force their hand? And that right there is what's been on everyone's mind. So what else happened today? Well, the 10-year yield backed off, right? On this report, it was good for bonds. 10-year yield back off about 2.33%. The yield curve, relatively unchanged, still inverted, the 10 and 2 and the 10 and 3 month, 181 basis points inverted. If you take a look at TLT, saw a nice little pop on the day, but still going sideways, trying to recoup some of these moving averages. Sideways trend like most of the markets, including the dollar. The dollar's been going sideways. The S&P 500 has been going sideways. Typically, we have a pretty strong negative correlation. If dollar goes down, S&P 500 goes up. So is the dollar going to be breaking down here, or is it going to be breaking up? And is the S&P 500 going to do the opposite? So we'll continue to watch that. Oil today was down 1.56%, so it's kind of had this reflexive bounce, right? This big hammer candle right here. We saw some follow through. We talked about it on this day over here, and then we just started to see a little bit of sell side today. Gold relatively flat on the day, just down 0.3%, we'll call it. Copper was down actually pretty wildly, down 1.5% is a pretty large move for copper. And I always like to look at the correlation between S&P 500 and copper, where copper potentially puts in a lower high and the S&P 500 puts in a higher high. It sometimes indicates to me that copper's telling us a different story than the overall market. And remember, copper or Dr. Copper, it's a good economic gauge on the economy, right? It's a very important metal. Okay, and then also on the flip side to that, if you see copper put in a higher high, higher low, while the S&P 500 puts in a lower low, sometimes you can see pops, and this was one that I caught earlier on, where we saw just a quick little pop there, but now copper's starting to back off. What did the markets do? The markets didn't do, well, really much anything if you step back and you weren't looking at an intraday chart, right? The Dow was flat. S&P 500 was up 0.5%. The big standout was tech, and nothing new there, right? Tech has been kind of the strongest all year. And if you just take a look at a heat map, you can see that here. If you just split this in basically half, right? Go right to the screen, you see big green over here, and then it gets kind of like faded out as we go on the other side. I will say utilities look decent. That was a top 3 in the S&P 500 of the 11 sectors, and this is more of a defensive type sector overall. So this is probably in response because it is a rate sensitive, and we saw a pretty nice move there in bonds and also utilities. Okay, what took place on the 15-minute chart on the SPY? Well, you can see we tagged up to the upper daily expected move. That's why we track these. That's why they're important. And well, what happened? Well, we sold right off. This is where we said don't go chasing up here. If we open up here, wait for pullbacks. Well, we pulled back. We saw a bounce. I played that bounce right here. That was my trade for the day. We pulled back to where the 5-day moving average, we saw a bounce, and then we had a big flush before a monster rip higher. Where does that put us overall? it puts us in the same exact area we've been pretty much for over a month, right? Between 4,200 and 4,100 as it stands. This was the day. This is just after hours trading right now. So honestly, it's still a coin flip. We can see a squeeze higher. We can see a breakdown lower if the market gets some sort of news or some sort of event that it does not like. Perhaps that has to do with the debt limit or perhaps a macro report that's going to be coming out in the near future. We showed Bookmap yesterday how we leveled out 40.99 to the downside, 41.71 to the upside. You can see here as the day started off, right, or just before the market opened, you can see we came in and tagged that level. That's why it's so important to know these, and then that's when we started selling kind of off. Earlier in the day, if you're following me on Twitter or if you're in the Discord, we saw some stabilizing bids kind of come in here, and this is kind of why I took that first bounce of the day over here. Then we came back down to flush, went down further, and so forth. Now going into tomorrow's trading session, the ES upper expected move is back to 41.79, which is just about right here. Okay, and that's right where this order of liquidity is here too as well. So that's going to be an important level to watch going into tomorrow. And then we also have 41.28, which is just about this area over here. Anything that stands out to me on this screen is that 4,200 level of liquidity that's been there for today's trading day, and it's also there as it stands right now. If we go on and look at tomorrow's daily expected move for the SPY, you can see it's 415.59, 410.11 to the downside. And on a good note, we're above, for the bulls, we're above the week to date anchored VWAP. We're above the month to date anchored VWAP. We're above the quarter to date, and we're above the 5-day moving average. Now, on the flip side to that, we talked about the trend. What's the trend telling you? There is no trend. It's sideways. It's neutral. So you can't be surprised if we just keep continuing to chop around until we eventually get a more sustained move, or we start to see these moving averages start to pick back up, anchored VWAPs start to move up, where they can hold as levels of support and we can start actually building higher lows. Because as it stands right now, it's clearly just spaghetti, right? Just sideways slop. Tomorrow, we have PPI. That's an hour before the market opens, right? Core PPI month of month. And then we have a jobless claim. So not too much data, but the market can respond to this type of stuff. So be on the lookout an hour before the market opens. And then obviously, if the Fed says anything crazy. One of the indicators that I like to track is back month versus front month. You can see we're now nearing 1.22, so 22%, right? So it's telling us back month volatility is 22% higher than the VIX, which is a pretty big difference right there, where you can see when we reach up into these levels, it has marked parts of times of consolidation, and you can see we reached up here and we've been just kind of chopping sideways. So we'll see how this resolves in the near future. On a positive note, the summation index starts still curling up here. It hasn't ticked over fully as a potential change in trend. It told us that when we saw potential change in trend here, it's been going sideways. So kind of the rally, right, stalled out right here at this trigger. It's been going sideways, and this thing looks just like it's coiling up very tightly. So if we do get this flip over and we get a potential big breakout, one sector to pay attention to, because this is the NASDAQ composite, a big component of the NASDAQ composite is the semiconductors. So I pulled up a semiconductor, just a VanEck SMH ETF, and you can see that this trend line has been holding as a level of support. And you can see price action is kind of flagging right here, or you can potentially look at this as a bear flag. So if we start breaking out, getting back above that 20-day, 50-day, and pushing up through, that could give us a nice big movement in the overall NASDAQ composite. Breaking and then obviously having this flip back over. So that could be a positive thing to watch out for. On the flip side of that, if it starts breaking down this trend line, well, the 200-day moving average is in striking distance where we can potentially see a breakdown to that. That's all I got for you on today's episode, everybody. Have a wonderful night.